Coming up today, the Dow closes above 45,000 for the first time. Will the jobs report derail the rally? Is the Fed about to go on pause soon? China bites back on the chips ban. A look at the new SEC commissioner. Any UnitedHealthCare CEO assassinated by a hitman, and why it may have occurred. You don't want to miss this one, guys. Let's go. And here we are once again, drifting higher in the S&P 500. In this low volatility trading, market seems to be in this grinding higher mode now, with the market once again full of dispersion. Energy, the real standout today. XLE finishing down 2%, while we've got discretionary, industrials and tech up over 0.6%. And once again, it was mega cap tech driving trading today, with the Qs breaking out to a fresh yearly high. With all mega cap names trading higher as well, there's Apple ticking up once again. Nvidia, the best performer out of them all, up 3.5%, back above its 50-day. And I've actually been long Nvidia as one of my first swing trade alerts that I entered on Friday, 131.97, almost nailed the low by 17 cents. And so this swing trades up about 10% just in the last 4 trading days. So far looking like a good dip buy. Others doing well today, Microsoft pushing up against multi-month highs, and Amazon all-time highs. Pretty good price action going into Christmas here. Consumer discretionary spending is strong. Nice bounce in Alphabet, Google, with it trading on the cheapest forward PE out of the whole group. You can own a piece of Alphabet for approximately 19 times next year earnings estimates. And Tesla once again shaping up, a bit of a triangle pennant or whatever you want to call it, pushing up against this big all-time high resistance zone here. Helping the chips today was Marvell Technology, coming in with a pretty good earnings report. Market loved it, up 23%. And so again, a little bit of a bounce back in the semis. The whole sector now back above the 50-day after it's been consolidating pretty much the entire year. And we're still seeing more of those former high flyers making a comeback as well. Roku up 9.5% today. Multi-month high. The Bank of the Internet, also known as PayPal, having a great day, up 4.92%. And former high-flying fintech, Block, used to be known as Square, ticker SQ, having a pretty good run here today. And one of my favorites of late, SoundHound AI, once again having a good day, up 14.3% on volume here, as we're still seeing a number of these other early-stage high-flying growth names consolidate, have a bit of a pullback. SoundHound AI has been a real standout. And so the market is on pretty firm footing. Quite obvious. Economy's holding up, corporate EPS. We've got a very pro-business admin coming in, bullish seasonal period, inflation's been coming down, Fed still wants to cut interest rates. It's no surprise to see elevated bullish sentiment. However, that can become too much of a good thing. Just like an engine, it can overheat. So again, for the here and now, and for the medium term, I think the risks are to the upside. The market could very well go into a melt-up, with inflation trailing close behind it. Animal spirits are well and alive. We can see that in speculative parts of the market, crypto meme coins, even NFTs have been making a comeback. Pictures of rocks. And so we're waiting for the jobs report this Friday, expected to come in 4.2% unemployment rate. We get no big surprises on the upside, 4.344. The market should cheer it on once again. Another sign the economy is holding up. Economists expecting the US economy to have added 214,000 new jobs last month. And that's really been the key risk the last few months. Kind of subsided in the last month or so. In fact, ever since Jay cut rates, pretty much subsided the next day. Market's expectation of a weakening jobs market and recession risks. Seen a strong rip in bond yields. Signs of consumer spending still holding up. Price of gas is still low. And we just heard from Jay Powell today, speaking at the New York Times Deal Book Summit, saying the Fed can afford to be cautious on rate cuts now. Some even saying he's gone slightly hawkish. And like my regular viewers know, pretty much happened right after the election, like a light switch. Went from very dovish to now saying, hang on, maybe we need to start talking about inflation again. We don't need to keep cutting rates so much. But it's true, there is economic strength to justify. Like I said on September 17, I thought he only needed to cut 25 basis points. Data didn't point to half a percentage cut because the economy was still holding up. Everything was okay. That's what the data was telling us. However, now Jay is coming out and saying the same thing. The economy is strong, and it's stronger than we thought it was going to be in September. He also said we've made great progress on inflation. There's the chart of PCE over the last 30 years. I guess they've made great progress if you use 2021 as a starting point. However, looking at the average over the last 30 years, like I said, 3 may be the new 2. But like I've been saying, the biggest risk just around the corner is a full-blown trade war with China. So just Monday this week, the US announced a new curb on high-end chips to China. And like the Chinese like to do, and is often part of their culture, when engaging in types of war, they do a tit for tat. And so they just announced a ban on several materials with high-tech and military applications to the US. With China saying it's opposed to the outgoing US administration broadening its illegal unilateral sanctions. We urge the US to do more things that would help stabilize the bilateral relationship and hope that the new admin will take a good first step in Chinese-US interactions in the next 4 years. I think they're going to need a lot of hope on that one. However, the Chinese do have a little bit of leverage. America does rely on China for 100% of some of these critical minerals, which they just announced as part of the ban. Now, of course, there's built up inventories elsewhere in the world, and this will spur on new supply chains. However, it just shows the Chinese are willing to bite back. So we don't know what they're going to do back when the new admin slaps them potentially with 30% tariffs. That's what I think is the biggest risk around the corner. And there's a look at the China trade. FXI still consolidating, been pulling back for over a month now. And I'd say it's going to trade like this until we know what the tariffs are. And then China will probably come out with more stimulus right away to counteract that as well, along with announcing their own retaliatory actions, all of which are yet to be seen. Otherwise, we're still getting announcements of who's going to head up the new team. We've got Paul Atkins going to run the Security and Exchange Commission, SEC. Conservative lawyer, well known in Congress and on Wall Street, served as a Republican member of the SEC during the Bush administration. And this guy is said to be another crypto bull as well. He even questioned the SEC's crackdown on cryptocurrency. And it's kind of funny we still call it cryptocurrency, as it's neither of which. Most people that hold crypto have got it custodianed by Wall Street Bank, so it's no longer encrypted. And currency implies a form of money. Why humans created currency in the first place. Moving on from the barter system, swapping apples for oranges, we created a medium of exchange, currency. And as we all know, nobody's actually using it for its original purpose as a form of anti-fiat currency. Instead, it's been treated as a constantly appreciating asset that's been compounding at over 100% a year since it was first created. With many people in the industry convinced that's the new normal and that it should keep compounding at least 30 or 40% a year for infinity, as the rules of finance have apparently been rewritten. But anyway, that's what people are still calling it. And this new admin is opening the floodgates for it to go as far as it can. After one of the biggest crypto hawks, Gary Gensler, has pretty much been booted from the job. He lost his battle against the so-called cryptocurrency. And so for sure, nothing looks to be stopping Bitcoin here and now. If everyone in the world buys it, there's no reason it can't go to 13 million a coin, and we can all make Michael Saylor the richest man in the world. And who knows, maybe him and Hunter can team up, start a new venture or something. Especially since he's a free man now. And what was that Joe said? Nobody's above the law. But anyway, relax guys, I'm just having a play around. Look at Bitcoin, also pushing up on a bit of a pennant consolidation formation here. Market seems to be toying with the $100,000 level quite a lot, just going down to 5-minute chart. Just about an hour ago, looks like we're ripping up. However, it seems to be bumping off those $99,000 level. May have another stab at it pretty soon. So it'll be interesting to see how far the infinite gravy train goes next year. Could very well hit 250,000 a coin. Because as long as the whales don't offload and the whole world piles on top of it, there's nothing really stopping it. And it's moving over to commodity. Once again, oil bumping around. We just got data, weekly US crude inventory dropping by more than 5 million barrels. Also news, deepening US sanctions on Iranian oil exports. We've got OPEC Plus meeting tomorrow, which they may announce some production cuts. Certainly if the Saudis get their way, that'll happen. It's just some of the other members are not so keen on it. And even though over the last couple of years, geopolitical tensions have been some of the most highest of our lifetimes, things do look set to cool down, as Zelensky pretty much has no option, as he's only been able to stay in this war thanks to US support. And so of course he's open to talks with the new admin who are likely to pull the plug on sending hundreds of billions of dollars and military weapons over there. Because just like Afghanistan, it could be dragged out for 20 years if they want to, but just like Afghanistan and most wars, the end result's pretty much always the same thing. Nothing's really achieved except a huge waste of money and life, but the outgoing admin is determined for it to keep going. We just heard US Secretary of State Anthony Blinken say today that Ukraine needs to get younger people fighting in Russia. He wants young Ukrainian men to go into the battlefield in Russia, but if he believes in this war so much, maybe he should send his own son there, instead of being willing to sacrifice the sons of other men. And since they just authorized Ukraine to send US missiles into Russia, hopefully it doesn't blow over before the new admin has a chance to negotiate it away. And there's a look at crude oil, just bouncing around once again, coiling up, maybe getting ready to break out in one direction, which I wouldn't be surprised if it were down. There's a look at gold as well, coiling up on the daily time frame here. I think the gold market's not sure what to make of all this. Are geopolitics still an issue? What about inflation? The US dollar, quite a lot going on for the gold market here. And so it was a pretty low volatility day in the market. There's not a whole lot of things moving, not a whole lot of big headlines or big earnings announcements, except for this one here. So I thought we'd take a look at this today, and I'll share with you my personal opinion, some data, and of course, as always, I'm not trying to offend or disrespect anyone. So I'm sure a lot of you guys heard the CEO of UnitedHealthCare, that's the insurance arm for United Health Group, was just shot dead this morning outside the Hilton Hotel in Midtown Manhattan. Now he's part of one of the biggest stocks in America, over $500 billion market cap. And so first off, our thoughts are with the family, and nobody deserves to be killed like this for whatever reason. Really unfortunate to see. Guy was only 50 years old, and I've actually seen the video online, and which looks like a professional hitman straight out of a movie. Like the police commissioner said, does not appear to be a random act of violence. And when you see the video, you can tell he was 100% targeted. So this wasn't just some random shooting. And we just heard from the wife of Brian Thomson, says he had received threats leading up to the shooting. And so first off, kind of crazy to me, multi-millionaire CEO who's been receiving threats just walking around the middle of New York City by himself. And so in my opinion, and of course this is speculation, it could be because of any reason. However, it could be someone that was potentially denied a health claim as he was the head of the insurance group, or maybe the hitman is close to somebody who was denied an insurance health claim. And it was kind of mind-blowing to find this data today that apparently almost a third of all insurance claims on UnitedHealthCare get denied. That is mind-boggling, not only against the industry average in America, but just in terms of global healthcare in developed markets. And again, I'm not trying to insult my American friends, but just to give you guys some context and reference. Here in New Zealand, and I'm not saying we're perfect with healthcare, we certainly could do with some more nurses and other things like that, but my private healthcare company, they deny about 5% of all claims. And in fact, most Kiwis don't even pay for private healthcare because we get free healthcare. You can go to the emergency room, you can go to the hospital, you can stay in the hospital overnight. They'll even do surgery on you, all at zero cost. And the cost to visit a doctor is about 20 to 30 US dollars. And so I have private healthcare, and that cost me about $90 US per month. And that entitles me 60% back on any doctor visits, physiotherapy, dental, so on and so forth. And if I need to get an operation, I can just get in quicker and choose who I want to do it and where I want to go. But like I said, most Kiwis don't have private healthcare, and out of pocket per year, all up on everything, I probably spend around $1,000 US per year on all health costs, insurance, and so on. And the funny thing is, a lot of the drugs, pharmaceutical products we get here in New Zealand are made by American companies. They're way cheaper here than what they are in America. For example, diabetic people, average cost in America is around $3,000-$4,000 a year, whereas here, it's a fraction of that because it's subsidized by our government. And so does that extra spending in US healthcare give better outcomes? Well, the answer is no. Looking at this chart here, you can see America has a huge health expenditure per capita, yet the life expectancy is well below that of other developed nations. And in fact, according to this data from NerdWallet, America is the only developed country where over 500,000 people a year go bankrupt because of medical bills, which again is kind of mind-blowing to me because down here in New Zealand and Australia, you don't really hear of these things. But I've heard it many, many times. Horror stories. Some friends going to America having to spend a couple of nights in hospital, getting an $83,000 bill. Other American friends paying insurance for decades, only when it comes time to claim, they get denied. And just a post came up on my feed today, just from some random guy. As someone who had a wife die of cancer, I can understand the mindset of someone who might be driven to do such a thing. Now, of course, that's not justified at all. Like I said, no one deserves to be killed because of this. It just may be a bit of a wake-up call for the US healthcare industry of, like this guy says here, what drove someone to do such a crazy thing. He went on to say, I really did feel like the entire healthcare system was designed to profit off our misery, and I was quite angry at times over those 10 years. So another sad story indeed. But again, the data backs up what these people are saying. Going back 1999, US inflation is up 86%. At the same time, the average family health insurance premium in the States up 342%. And I've seen the receipts of what people pay for health insurance over there. It's mind-blowing. That's why, in my opinion, extreme capitalism is completely overridden the US healthcare industry. And of course, Obamacare just poured fuel on that fire. And that's why, in my opinion, and I'm sure a lot of my American friends would agree with me, the US healthcare system is broken. It's completely blown out with costs. And in the world's richest country, so innovative, leads in so many fields, should have universal free healthcare for all citizens. Because like I said, a lot of the drugs we get down here, made by American companies, are way cheaper than what Americans pay. Just doesn't sound right. But I guess when you knock back a third of all health claims, it's quite beneficial for shareholders. United Health Group, since 1999, with health premiums up 342%, and that's what's actually been reported by the government, could very well be higher. United Healthcare Group, in that time, the S&P 500 hasn't had a bad run at all, up 314%. United Healthcare Group up almost 10,000% in that same time period. In my eyes, this is just a huge transfer of wealth from the average American paying out their nose in healthcare that they're not actually really covered for into the pockets of large shareholders. Can't imagine paying my health insurance company for decades only to have an accident or something else and then they deny your claim or run you through the ringer for years. Certainly a sad case of affairs, in my opinion. And so hopefully this is a wake-up call for US healthcare and just goes to show how ripe for disruption it is. And companies that can deliver healthcare for a reasonable cost to Americans could very well make for good investment, especially with RFK now, trying to completely overhaul the health and food industries, as so much of the system is incentivized to get people sick, keep them sick, and just extrapolate max profit. But anyway, that's just all my opinion. You don't have to agree with me. And at the end of the day, it was sad to see what happened. So rest in peace, Brian Thomson. Just moving on to show you how big and immediate an effect having the right leader can do to a country. Look at this from Argentina. Economy was spiraling for decades, crushed by socialism, corruption, overbloated government, excess spending. Malay gets in there, does the biggest shake-up, cost-cutting, getting rid of entire government departments, slashing regulations. Straight away, their budget went into surplus. They're taking in more tax than what they spend. And with that, inflation's come right down, and investor confidence has come back to Argentina, and it's been the best international performing stock market this year. Potentially laying out a template for the new US admin, who's looking to slash spending, cut regulation, and start running the government like a business. And like I said, hopefully they can also bring down the cost of healthcare for Americans. At the same time, increasing the quality of food. A lot of chemicals and additives that are banned in other developed countries are allowed in America, which again, for the richest country in the world, should be doing a better job on that. And just getting back into the charts, there's the VIX, 13.4. Just got one of my reversal signals here. Anybody into hedging? Now might not be a bad time. Buy some put options, fixed calls, or any other way. And just like any insurance, you should expect to lose money on it, but you should be happy to lose money on it because you don't want the bad thing to happen. However, I tell anybody, if you can't handle a 20 or 30% pullback in the stock market, you probably should be carrying insurance. And the good thing with stock market insurance is when it's paying out, that's when the market's dipping. It gives you fresh capital to buy the dip on your favorite stocks. And just looking at a few spreads, we got a multi-month breakout today and high beta stocks versus low volatility. That's a risk on growth move. Same with my composite of growth sectors versus defensive sectors, breaking out to a yearly high. And consumer discretionary versus consumer staple stocks, also on a solid run here, showing the market's very much in a risk on pro-growth mode, whilst inflation expectations pretty much trading the same level since the day before the election. Otherwise, that's a wrap for the daily market review today, guys. As I said, not much big news headlines out there. Market's just kind of grinding and drifting higher and low volatility as we kick off December here, typically bullish seasonal period. And unless we get any real surprises, it can kind of continue like this throughout Christmas into the new year, as it actually looks like a pretty similar setup to December last year, just going back to the same time last year, just kind of drifting and grinding higher and actually just kept on melting up actually all the way through Q1. Mega cap tech went on fire. We didn't get a half decent pullback until April actually. However, the difference this time, we've got tariffs just around the corner. And like we've seen today, China may have already kicked off a bit of a tit for tat. Every time the US puts something on them, they're going to put something back. But of course, the US has more leverage, especially now with a strong economy and a strong stock market, of which China is still trying to get under their de-accelerating economy. And we've got one more day of trading tomorrow before the jobs report on Friday, and that should come in as expected, 4.2%. Thanks very much for sticking with Click Capital, and I'll see you guys again tomorrow. Cheers.